Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodPartners.com. Welcome back to the show, Hilliard.
Nice to be back.
Hilliard, the Evergrande crisis in China, can you maybe just give us a little picture of what it is and what does it mean to us?
So the second largest property company in China, and probably in the world, is called China Evergrande, and I never know whether you say Evergrande or Evergrande. And they are unable to pay their debt, so they missed an interest payment on Monday of this week, and they're going to probably miss two more on Thursday. So they've been in this situation for a long time. They were highlighted in 2018 as being a problem, but they're so big that they just keep rolling along. But so the actual debt that is official is around $100 billion US, which is similar to a company like Brookfield in a Canadian-based huge conglomerate. But in China, they have a different thing where they borrow money from the property investors and from their trades, so the contractors and subtrades. So the total liabilities are more like $300 billion US, which puts them way up above pretty well anybody else. And this money that's owed to the people that buy the apartments, which are, by the way, are in the second and third tier cities mostly, not in the tier one cities like Shanghai. They sometimes, in some cases, they put down the full amount of the purchase, not just a deposit, but actually they go and get their mortgage and they give the developer the full amount of the money, which seems kind of crazy to us because this is before the property is even built. So they owe those people an apartment, and a bunch of these buildings are unfinished because the other thing they do is with the contractors and the subtrades is they borrow from them as well. So instead of paying them for the work they're doing, they give them a piece of paper saying, I owe you this much money for the work that you're going to do for me. And so those guys have put down their tools and refuse to do any more work until they get paid. So there's been several defaults on all sides, and it's pretty crazy. In fact, everybody, all of the usual suspects, the Financial Times, the Wall Street Journal, all of the investment analysts are basically commenting on this situation as it, they're saying, is it another Lehman Brothers moment like we had in 2008?
And if it is Lehman's Brothers moment, they're blamed for starting the financial collapse of 2008 and the recession.
Exactly. So the Lehman Brothers moment was in September 2008, and it was just sort of that was just the moment when the financial crisis, which had already started a few months before that, deepened into something much worse because the government, for whatever reason, had bailed out several of the big Wall Street firms, but they decided not to bail out Lehman Brothers. So there was a panic that went through the world financial markets because nobody could trust anybody to repay their loans that they make. A lot of these firms make loans overnight just for 12 hours or 8 hours or 4 hours. And but if they're unwilling to lend, then the whole thing kind of collapses, and that's what happened. And so that's why it's called a Lehman Brothers moment, because the trust completely went out of the system. Now, when Lehman Brothers collapsed, it was a $600 billion in assets and $630 billion in liabilities. So they were in the red by $30 billion. But it could have easily been 570 and 600 or 650 and 625 because the assets that Lehman Brothers had were based in the financial markets, and they move around a lot, but they're also very liquid. So it was, it could have easily been worked out without a collapse. I think the government of the United States at the time decided to make an example of Lehman Brothers. It didn't really work because within a couple of years, everybody at Wall Street went back to the usual ways. But the Evergrande, China Evergrande is much different because these are real debts, not just sort of overnight debts for trading and derivatives and all that stuff like Lehman Brothers. These are debts that are based on families' life savings and construction companies that really have done a lot of work for Evergrande, and they need to be paid or else they'll go bankrupt. And then, of course, foreign investors. So the thing we haven't talked about yet is the fact that of that debt, a significant amount is owed to foreign investors in U.S. dollars. So this is the classic emerging market problem where they borrow in foreign currencies like the U.S. dollar, and then something happens and they can't repay it and they can't get their hands on U.S. dollars to repay it. The government of China can print the local currency, renminbi, but the government of China cannot print U.S. dollars. So they'd have to get if they ran out of U.S. dollar reserves in order to repay these debts, they'd have to get a loan from the Federal Reserve Bank in New York, which is what happened in 2008. A lot of the countries, including Canada, signed up for loans from that, and then after the crisis passed, they repaid the loans very quietly behind the scenes. But in this case, it could be a moment. But I don't think the Lehman Brothers parallel works very well in this case. I think the better parallel is what is called a Minsky moment.
And that is?
So a Minsky moment was actually the term was coined in 1998, but it came up in the global financial crisis in 2008, and it refers to an economist named Hyman Minsky, who had a book called Unsustainable Finance, sort of the gist of it, and he delineated the cycle of borrowing and lending, and he had three stages of finance. He had the hedge finance, which is where the borrower can repay the loan quite easily out of income. The speculative finance, where the borrower couldn't really repay the loan if asked to, but he can pay the interest on the income from the property. And then the Ponzi finance stage, which is where basically the borrower can't even pay the interest on the loan, and he keeps needing to have new loans in order to roll over the old loans that he can't repay. And based on this recent development with the failure to pay interest payments on the loans, it looks like Evergrande falls into the Ponzi finance scheme, and probably the whole property sector in China falls into that category. And this is where they need to borrow more and more money all the time just to keep the wheel going. The speed on the treadmill is been turned up, and they have so much debt that they need new loans just to cover the interest on the previous loans. And the part we need to mention is that the Chinese government has been cracking down on all kinds of sectors in the economy, and they've singled out the excessive debt levels in the property sector as something that they want to fix. Now, all of the commentators that I've read in the last, this has been going, I first wrote about this in July in my weekend note, and there's been a lot of commentary since then over the last few months, and all of the commentators pretty much agree that the Chinese government will never let China Evergrande fail, in which case they would just have to authorize new loans to help China Evergrande pay the interest on the previous loans and more loans to keep the bubble growing. But on the other hand, the Chinese leader Xi Jinping has said that he wants to crack down on these things. So if the Chinese government goes ahead with the crackdown, and they've done it to several companies, Tencent, Alibaba, Didi, several of these companies have been, given at least a slap across the face, if not a complete slam down. If they do the same in the property sector, we could be into a Minsky moment for sure.
We do know that there have been riots in China, unpaid contractors, people who expected to move into a new home and it hasn't been built yet. They're very upset. Will the Chinese government go after the protesters or go after the source of the protest and pay them off?
Well, so the game in China is quite interesting. You know, these protests are highly organized, and what it is they make enough noise, and then the government offers them a settlement, which is usually not the full amount of what they've lost, but they accept it because they know that they're not going to get any better deal out of the thing. So the protests are kind of like a ritual. The government offers a settlement, which is also a ritual, and we just don't know yet what's going to happen. The Chinese government has been remarkably silent throughout this whole last 3 months, and they've made no noises at all, which is, as I mentioned a minute ago, everybody is saying that the government will bail out Evergrande and the families that have bought apartments and the contractors. But nobody has any evidence, except that in the past that's what they've done. But nobody has anything that they can point to now that indicates the attitude of the government. Now, some very astute observers that I've been reading indicate that the fact that there's been silence so far indicates that the government was not aware of the extent of the problem and the size of it, and they just don't know what to do yet. And that would be my guess, is that if they had a plan that was going to work, they would have announced it by now. So they're struggling to find a plan that is going to work. And the expansion of the total debt to the private sector in China has been absolutely spectacular, even faster than Canada. And you and I've talked many times about how China is one of the leading, how Canada is one of the leading countries in the world to expand private sector debt. And the debt to GDP ratio in Canada has gone up about double. So the amount of debt has grown twice as fast as the GDP has in Canada over the last 40 years or so. In China, it's triple. So it's 300% growth in debt to GDP compared to Canada's 200%. And those are the two leading countries in the world, China and Canada. And, the rest of them are like the U.S., who had a global financial crisis in 2008 for the same reason, are like at about 150%. So it's one of those things where the government, everybody has all this belief in the government, but really, we all know that governments are not very good at doing things sometimes. And the trust that the property buyers and a lot of the people in China put into the government is going to be tested right now, because we don't know if the Chinese government could come up with a good solution. Maybe there is not a good solution, because they're very worried about just bailing everybody out and creating what they call moral hazard, where everybody just says, you're good to go, and go back and continue on with your Ponzi finance scheme, and if it goes wrong, we'll bail you out again. At some point, the only way to convince people to stop doing that is to allow them to fail. But a failure in an economy that's so indebted to the private sector is a scary prospect.
And for China, I would say that they've only really embraced capitalism over the last 10, 15 years. They're new to it. And so how to deal with a possible failure or maybe even a collapse, they have no experience with it. And look at us on the western side of the planet, where we've been a more or less free enterprise deal for 250 years, and we don't always deal with it all that well. So can you imagine these are kindergarten children given the keys to the bank vault to play with?
Well, yeah, in the Western world, the developed world, we tend to bail out the banks and let everybody else fail, right? Because we realize the banks are crucial to the wheels continuing to turn. And the bank shareholders often take a hit, and the banks sometimes are forced to sell their assets to another bank, but basically the banking system gets bailed out. But we haven't talked about the Chinese banks yet. So 6 of the largest 11 banks in the world are Chinese, and the top 4 are all Chinese. And most of their collateral is based on property in China. They lend to state-owned enterprises, lend to private sector individuals, they lend to private sector families. But an awful lot of it, because the property sector in China is 25% of GDP. It's about In Canada, it's less than that. It's probably 15%, and most other countries in the world, it's under 10%. So Chinese property sector has been the engine of growth and the debt that fueled it for many, many years now. And so the banks are heavily involved in that whole game. And so the government will have to bail out the banks. The banks are all majority owned by the government in China, but there are foreign investors. And it'll be interesting to see. One could guess, I think, probably with some confidence, that the Chinese government will bail out the local people and let the foreign investors take the losses, if they can get away with it. But even that would have a huge impact on the world attitude towards investing in China. And China needs, at least they were saying they needed and they encouraged foreign investment. But this would be a setback to foreign investment of substantial, probably would be, at least a decade or two before people would come back if the Chinese government lets, that $100 billion in US dollar debt, go uncovered and just bails out the local people and lets the foreigners, suffer. But that would be the likely outcome, I would think.
Now, authoritarian regimes, when they run into financial trouble, like to start wars to take their people's minds off the fact they don't have enough food and money to survive. I think of Argentina invading the Falklands in the early 80s, and then Britain's very measured response to it. They gave them a long time to withdraw their forces before they got serious and attacked. Would China, if it felt desperate in financial straits, would it go and attack a place like Taiwan to take people's minds off the fact that they've lost all their money?
Yeah, you wonder. I think certainly the making the foreigner, in this case probably the U.S., as the bad guy would definitely be part of the program. And there's another development this week where the U.S. and Australia made a deal to bring in submarines, and they cut out France, who had had a contract to build the submarines for Australia. And Britain's involved in the new pact as well. So there's three countries, Britain, the U.S., and Australia. But it's a direct challenge to China because the submarines would be based in Australia, would be capable of hitting China. So it's a friendly nation, but it's close enough. Australia is close enough to China. So the Chinese will see that as a threat. And that would be something where they could distract people a little bit by sort of making a big confrontation with Australia. But Australia and Canada are in an interesting position because these are the two countries where investors from China have bought a tremendous amount of property. So if we get into a situation where say take the example of Australia provides a lot of iron ore to China as well. If the Chinese and the Australians get into a disagreement that turns ugly, it'll have a huge impact on the property sector in Australia and probably the iron ore market. I haven't looked at it closely, but the iron ore price has been plummeting for the last few days, and it could be that the Chinese are punishing Australia for signing this pact with the United States by not buying their iron ore. They basically only have the one buyer for their iron ore, that's China. So if the Chinese decided to stop buying it, Australia would suffer greatly.
And of course, people say that's a good reason not to do business with China. They'll try to punish you if you do something wrong that they don't like.
Yeah, I mean, the Chinese, it was always the situation that the Chinese needed raw materials from the rest of the world. They don't have enough of most things. And we like to buy their goods. Like, you push that button on the online buying and 2 days later something shows up and, 99% of the time it says made in China on it. So, we enjoy that relationship as well. And a lot of that stuff that we can get is probably we wouldn't be able to get, at least not at that price, if it weren't for China. So this thing would have major implications if there was a break. But we're building a pretty big scenario from just the one sector in China, the Chinese property sector, and the failure of one big company to pay its debts. but these are the kind of things that can escalate around the world if it isn't handled properly. And as I said before, it just might be that there is no good way to resolve this issue. And I think most people are still of the belief that the Chinese government will bail out Evergrande, and they'll save the property sector in China because they have no alternative. But it's just possible that there might not be a good way to do that, or even a bad way to do it.
Or there could be an international effort, because a company that size, we found out during the pandemic just how closely we're connected, from microchips to ketchup packs to hot sauce containers, garden gnomes. One little hiccup on the other side of the planet affects your ability to get seeds for your garden and so on. So, could there be a worldwide effort to make sure this thing doesn't collapse? Because we can see how the ripples become a tsunami once they build up steam.
Well, when you look at the semiconductor shortage for cars, automobile sales in the U.S. are plummeting because of new automobiles, because they can't build any new cars because the chips are not available. And apparently, the biggest semiconductor manufacturer in the world is in Taiwan, and another one is in Malaysia, and they just don't have the chips. And this has been going on for a year or two. So it's like there's a major disagreement between the suppliers and the auto companies as to what they're going to do about these chips, because generally these things could be resolved fairly quickly. And so the integration. So maybe what we're talking about is how the integration of the world economy went too far, and now we're going to go back to where people have to be more self-reliant on a lot of these things. In the case of China, it would be foreigners lending money to the Chinese property sector. That might end fairly abruptly here if this isn't resolved. And in the case of North Americans buying all of these things that we need from other countries, we might have to learn how to make them ourselves, and it's going to be difficult because there aren't very many manufacturers anymore that make stuff themselves. A lot of them, they outsource everything. So Tesla being one of the companies that actually makes their own chips and makes their own cars and makes their own pretty much everything, and that was a conscious decision a number of years ago. But most of the other manufacturers, a lot of them, they outsource pretty well everything. They just put their brand name on the BMW made by all kinds of other companies, and not necessarily very much is done by BMW. So
sure, back in the old days of the VCR, they were all made in South Korea. They just put a different case on it and a different name.
Yeah, so we'll see. I mean, the other side of the coin, to look at it differently, is if there is a major disruption between China and the U.S., not just over Evergrande, but over everything. Some of these other countries like South Korea, Vietnam, Malaysia, Indonesia, there's cheap labor there, and they might be able to take advantage of the situation. And if China goes back into an isolation, kind of an antagonistic attitude towards the rest of the world, there's obviously going to be lots of other countries that would be willing to step forward and say, "Oh no, we'll make those chips for you. We'll make this for you." But hopefully they don't get hooked on the property sector like China did.
We'll have more with Hilliard MacBeth right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Over $600 million later and millions of votes cast, and Canada has exactly the same minority government it had before the election. Housing is something that we like to talk about. Will housing policies be different or change? And what's the government offered in the past? And is it really a solution?
So there were several reviews of each of the parties, the three big parties anyway, had a platform on what they would do about housing during the election campaign, which I think is the first time I've seen that, if ever, because housing affordability was such a big sector. But most of them wouldn't help. In fact, some of them would hurt quite a bit. Like some of the proposals were, allowing CMHC limits to get bigger and allowing lower down payments. And the Liberals that won probably will form the government. Some of their proposals were like that. They were on the demand side rather than supply side. But the bottom line is it's all tinkering around the edges, and it doesn't really address the main problem. The main problem is that house prices are too high for affordability. The incomes of the average family in Canada haven't grown much. They basically have kept pace with inflation for the last 40 years, and the house prices have grown at double the rate of inflation for the last 40 years. So now the discrepancy is so big that the only way to bridge the gap is for people to take on ridiculous amounts of debt. And, we've just spent quite a bit of time talking about the problems that this has created for China, and it could easily create similar problems for Canada if we keep piling on excessive debt just so people could get into houses. And none of the proposals by any of the parties would even talk about how you address that problem. They wouldn't even talk about private sector debt or how you address the problem of excessive private sector debt. So I think the only way this is going to be resolved will not be by government policies, except maybe by a government mistake, but it'll be by having a price correction. And it'll have to be pretty substantial to get it back to affordability. I mean, that long-term average has been 3 times incomes. So it's hard to, these numbers are shocking, but the average income is below $100,000. So let's be generous and say 4 times income, although that's well above the long-term average. That would indicate houses need to cost about $400,000 if the average income is $100,000, which it's not. It's well below $100,000. In Vancouver, it's not even $70,000. In Alberta, it's $100,000. In Toronto, it's probably $80,000 or something like that. So $300,000 to $400,000 is where the average family could get into a house and manage the debt without too much trouble. The only way this has been allowed to continue is because interest rates have gone so low. The mortgage rates are down at a 1.5%, so the monthly payment looks like it's affordable, but it's not. The total cost of the purchase is not affordable. And so if they keep interest rates this low, which is, the rate of inflation is 4 or 5%, a mortgage rate is 1.5%, that's ridiculous. That's never happened before. And all that will do is just inspire more excessive speculation and flipping and all that kind of stuff, which all that does is just push the house prices higher until the borrowing and the lending dries up. So that would be the Ponzi finance. To go back to what we talked about at the beginning, that would be the Ponzi finance stage of our borrowing and lending in Canada as well, and it's on the similar category, which is housing. And the government election didn't change any of that.
I've heard one of the biggest problems with housing in Canada is the inability to get a building permit in a quick and efficient manner. Canada is 62nd in the world when it comes to efficiency in granting building permits and permission to start projects. How do we attract investment, whether it's domestic or foreign, if that's the case?
The supply side, we didn't talk about that, I'm very skeptical of that. And the reason I'm skeptical is that the housing starts have been, since 2010, have been much, much higher than they were for the previous 3 decades. Annual rates of 200,000 plus units. Now, they might be building the wrong units. They might be building 500 square foot condos, whereas what we really need is homes for families. It's hard to fit a family into 500 square feet. But I'm skeptical of the supply. The other indicator that that argument isn't correct is that we're putting 10% now of our GDP into housing. Much more. So to give you an idea, the U.S. peaked out at 6%. After the crash in housing in the U.S., it went down to 2%, and it's now back up to about 5%. And there's no big shortage of housing in the U.S. House prices have been going up lately, but there's no big shortage of housing. So I don't think that the fastest way to fix that would be to put a tax, and it's been tried in Vancouver to put a tax on empty housing, but there's lots and lots of excess housing. It's owned by speculators and investors, and it's being rented out as Airbnb units and that sort of thing. But I don't think we necessarily need to put even more of our economy into housing. We need to get rid of the excess demand, which is created by excessive debt creation. And so the credit side of the equation is where we need to attack the problem.
Hilliard, thank you so much for chatting with us.
Nice to be with you again.
My guest has been Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBethMcLeodPartners.com. You can find him on Twitter at HMacBE. If you have any questions for Hilliard or any of our other guests, you can send them to info@HowStreet.com and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.